Well, Belinda, the budget has come and gone, and the title of our budget piece was Big Ambitions, Mixed Results. What's your view on the budget?
Well, I think that title really does sum it up. I think it was one of the most keenly anticipated budgets in quite a few years now, just because of the potential changes we were going to see around housing tax policy, the NDIS and defence spending. And on that front, it didn't disappoint. There were a lot of details in the budget just around tax changes, new spending measures, tax reform. But some good news is that it does now appear that the budget's on a much more stable trajectory and there are actually surpluses forecast in the out years. There's always going to be some surprises on budget night. We did see a lot of policies well flagged ahead of time. Were there any key surprises for you in the budget?
Well, I guess the government was trying to balance cost of living, also at the same time with higher inflation in the economy. That said, we did see workers get $250 in an annual tax offset from July 2027. So that's good news for households struggling with cost of living pressures at the moment, but it does raise the question around demand, consumer spending, and what that means for the economy and interest rates going forward.
I think that's probably the one area that I would have my key takeout is we're very focused on whether or not this budget will look at helping the Reserve Banks fight against inflation over the next 12 months. And on that front, the size of the budget deficit this year is actually a little bit worse than the current financial year. So there are just some question marks about the future of interest rate hikes here in Australia. We're still flagging that the risk is to the upside.
Just touching on property and tax, what are your impressions of the budget as far as these policies are concerned?
So as we noted, the changes to housing tax policy have been floated around for quite a few months now. So as expected, negative gearing has been scrapped unless you owned property as of 7:30 p.m. on budget night. New builds, you'll still be able to negatively gear though. There has been some changes to the capital gains tax program as well. The 50% discount on capital gains is now being moved to an indexation system. So it's a bit back to the future in terms of that policy, or a minimum 30% tax rate as well. We do anticipate this will have some impact on the housing market, particularly in the near term. We are now revising our home price forecast for a 5% lift this year down to a 3% lift. And we generally think that if you compare our previous home price forecast to now, there's around a 3% reduction in our baseline forecast. So we are anticipating a small impact on prices. In terms of construction and rents though, we could also see some improvements in construction over time.
Of course, health is always a big focus, and we've had public hospital increases as far as spending is concerned, but cuts to the NDIS. What are your impressions on that one?
So again, another policy that was well flagged ahead of time. We know that NDIS has been struggling with some very large cost increases and the number of people on the NDIS. So we do see a lot of savings come through that package, particularly over the next 10 years. It's probably one of the biggest risks to the budget bottom line, if you look 10 years out, is whether or not the government will be able to deliver those savings. One of the focuses also going into the budget was on national resilience. So for us, we were watching two things very closely: fuel security and defence spending, and we got announcements on both.
We did, Belinda. So everyone's become an expert on petrol prices of late with the Middle East conflict. We have seen fuel security really in focus. So on the back of that, we should see some increased security around fuel supplies, particularly for diesel, gasoline and kerosene. And also at the same time, we have seen defence budgets around the world increase, and we should see defence spending at around 3% of GDP, with about $53 billion allocated to defence going forward. So that will build security and resilience for the Australian economy.
We were keenly watching to see if we'd see any business tax reform, but it looked probably a little bit light on, but there are some good news for small businesses though.
There are, Belinda. So the 20,000 instant asset write-off for small business has been made permanent from July 1, and businesses with turnover under 10 billion will be able to immediately deduct assets at that threshold. So that's really good outcomes. Also a focus on research and development incentives, and also incentives for venture capital. So that really captures that entrepreneurial spirit for Australian businesses at the moment.